All right, well, welcome everybody. So glad to see you all here. And I'm so excited to welcome Cleve Mesidor. It's a real honor to have her here. Before I turn it over, I just wanted to give you a little bit of background about her. She is currently the executive director of the Blockchain Foundation. This is a 501c3 and it leads industry-wide crypto education campaigning. She was a mayoral appointee to the DC Innovation and Technology Inclusion Council. Cleve is a Web3 expert working in crypto for over 6 years. She's been profiled on CNBC, ABC, NPR, PBS, New York Times, Washington Post, Politico, Time, and now here at Storj in our speaker series. So we are so lucky to have her. She's been a headlining speaker at Money 2020, South by Southwest, CES, and many, many others. She has served in the Obama administration, where she focused on fostering innovation and entrepreneurship. And she is the author of The Clevolution, My Quest for Justice in Politics and Crypto. She earned a Master of Arts degree from Howard and started her career in broadcasting at CNN's Washington Bureau. Last year, Cleve and I spoke at Black Blockchain Summit at Howard University, where we got a chance to catch up afterwards. And I got her book there and had the joy and pleasure of reading it afterwards. So I encourage you all to do the same. And just really want to say thank you so much for joining us, Cleve, to talk on the important topic of financial inclusion in crypto. So welcome.
Thank you so much, Catherine. I'm thrilled to be here. And thank you for your colleagues for gathering and having this conversation. I want to start by wishing everybody a happy Financial Literacy Month. It's not the sexiest of the national months that we observe, but for the Blockchain Foundation, it is where we do our annual conference every year. So this year we actually hosted our inaugural conference, which was held in DC at the MLK Library downtown. And so I know we have probably about 50 minutes for a conversation. I'll leave time for Q&A. But what I plan to do is just tell you a bit more about my background, a bit more about the foundation, and then go into a topic that I would love to talk about, which is the difference between policies to foster financial inclusion versus policies to foster consumer protection. So I'll start by telling you a bit more about myself. Catherine shared a bit about my background, having worked in Congress and served in the Obama administration. I actually, during the Obama administration, served at the Department of Commerce at the Economic Development Administration, where economic development was our exclusive focus. And I will say that experience, I was the Director of Public Affairs for EDA, the agency, really gave me this view of economic growth and innovation and entrepreneurship. For the Obama administration, that's what we sought to infuse into the economic development toolbox. It was actually during the Obama administration that I first learned about Bitcoin. In 2013, a friend had a Bitcoin project. The friend did not work in the Obama administration, but I was serving in the Obama administration at the time. And he called and asked me to help him with a press release. And, which is something that was in my wheelhouse. I had never heard of Bitcoin. And so I did the research, helped him with the press release, found it interesting. So in 2013, that seed was planted. And all of a sudden, I started seeing Bitcoin everywhere. And there was a movie called Dope that actually came out in 2015 that really, had an impact on me. And so I went down that rabbit hole. And spring 2017, left politics and started working in crypto full time. And that's because at the end of 2016, I moved back to New York City. And if people remember the New York City ecosystem during 2017, 2018, it was like this place of just magic, of all of this infusion of innovation. And so that's what led me to crypto. So, I'm thrilled to be here with you. As you all know, Storj is a member of the Blockchain Association. I've been working with the Blockchain Association since 2019. As you all probably know, that the best and worst thing that happened to crypto happened in December 2017. Bitcoin hit $20,000 and everyone lost their mind. Wall Street was just like, what is happening? Silicon Valley was like, well, we still don't trust it, but that's interesting. And, while clearly, the federal agencies that focus on national security were blockchain and it was already in their radar. But for the IRS, for Congress, they started paying attention. And quite frankly, in spring of 2018, when the regulatory conversation ramped up, there weren't that many of us that actually had a Washington background and understood crypto. And if most of you know, that's when the Blockchain Association was actually created in 2018 and ramped up in 2019. And I met Kristen Smith and we started collaborating because they sought to be that united voice for the industry. But I as in talking to Kristen, I knew there'd be a gap with diversity, equity, and inclusion, making sure that the Black Caucus, Hispanic Caucus, and Asian Pacific American Caucus actually were involved early. So our first activity working with the Blockchain Association was the Women of Color Congressional Briefing in October 2019, where we brought a delegation of 25 women from across the country that were building on blockchain and crypto and leveraging cryptocurrency. And we had members of the Tri-Caucus participate. That work continues with the Blockchain Association. And in 2021, we recognized that there was a need to go deeper into education and not just educating, Congress, and policymakers, which was necessary. We saw a need with public institutions, the heads of advocacy groups, nonprofits that have the largest constituencies that were struggling with understanding this, but also struggling with who should they partner with. As you all may know, Black and Latino communities lead national adoption of cryptocurrency. Most of the nerve center of adoption is in working class people, communities of color, and young people. And so when you look at these constituencies, groups that focus on, healthcare, women's groups, environmental groups, civil rights groups, their constituents are a large part of these demographics, and they struggle. So in 2018, when they created the Blockchain Association, which is a C6, they also created the Blockchain Foundation, which is a C3. It stayed dormant. We relaunched it in 2022, and this past March was our 1-year anniversary since we relaunched the foundation. And the foundation is exclusively focused on education. So the Blockchain Foundation is the sister entity to the Blockchain Association, but you don't have to be a member of the Blockchain Association to engage and participate. One of our founding sponsors is actually Visa, and their Visa crypto team has been a huge supporter. So that is where the foundation is right now. As I mentioned, Financial Literacy Month is our anchor. So we just did our inaugural conference. It was an all-day conference, which was amazing. We had a state representative from Mississippi join us to talk about the work that they've been doing. And the state representative, Letitia Jackson, actually just introduced a mining bill for Mississippi. It was a bipartisan bill with, I believe it was the speaker, but she's also a champion of financial literacy in Mississippi. And so one of the things that the Blockchain Foundation did in January, was publish our first white paper. We did research on financial literacy education in K-12 schools and call for the infusion of digital assets into that conversation. Our research report highlighted that 17 states now require financial literacy to graduate high school. Mississippi is one of them. New York State is not one of them, ironically. And so our paper called on mayors and governors to lead the way. We think that financial education in K-12 schools should be standardized and codified to make sure that there's equity into that education. So that gives you a bit of the work that we do. We focus our first year on building partnerships. We partner with the Aspen Institute, with the Zahn Innovation Center at City College in New York. With Consumer Reports, they've launched a new framework to actually assess, risks in digital assets products. And we actually formed a partnership with the New York City Small Business Agency because the commissioner recognized that businesses in New York City were leveraging digital, well, emerging technologies like blockchain, but also emerging industries like cannabis. So we've been doing a series of workshops with them. The first one, we had over 500 small businesses across New York City join and participate. So we've been busy our first year because we do think this conversation around education is not necessarily sexy, but it's really important. And especially when you look at the White House's focus on risk mitigation, the regulatory bodies, their focus on risk, but also Congress as well. So the foundation, our goal is to lean into this conversation about risk. Even for our conference, the theme was that education is risk mitigation. I'll tell you, a bit more about some of the projects that we do. One of the things that we do have is a financial inclusion working group. So when Kristen at the Blockchain Association had created a DEI working group for the Blockchain Association in 2019, and that was one of the projects that, along with Jacob Hampel, who's now at Filecoin, but who used to be at Crypto, at Blockchain Association, Jacob and I led the DEI working group for the Blockchain Association. And so when we created the foundation, we moved it to the foundation and we launched it as a working group on financial inclusion, which encompasses DEI. So for the foundation, that's one of the projects that continues to be central for us. And obviously, we've opened it up beyond Blockchain Association member companies to our partners like Visa and others, but also to other entities that are doing an interesting work. So Robinhood is one of the companies that have been talking to us about collaborating. And so the working group is where we actually get to do this deep dive into this conversation. One of the most important projects we plan to launch, will be our signature project, will be the creation of the first one-stop shop for education in crypto. Let's be honest, right now, YouTube is the only one-stop shop for education. And, the space is very new, and, adoption and interest is outpacing our capacity to build infrastructure. So for the foundation, we want to create a virtual digital assets public library. Our goal is not to create content. We want to aggregate content. We know that academic institutions, governments, so when you look at even CRS in Congress or the various agencies within the Department of Commerce, and even within the industry, there's so much content, reports, analysis that have videos, books that have been created. So the foundation, we've actually talked to the American Library Association about this project and are looking for them to collaborate with them. They actually have a consortium of retired librarians we plan to tap. Why this is important is because, libraries have had to digitize their content. They have figured out how to, aggregate content for mass distribution and across various audiences. So our goal again is not to create content, but to create a one-stop shop where we can actually aggregate content, get content from multiple sources. I like to say that the industry is focused on adoption, but the foundation is focused on accessibility. We want the foundation to be a place where you can get content on, well, I'm concerned about this. How can I get deeper? The foundation is definitely not a place for haters. So Brad Sherman and Elizabeth Warren, you have to find someplace else. But if you do have legitimate questions or concerns, we want that to be part of the content within the library as well, where people are really debating the merits of this and doing it really from an objective perspective. So we've, again, as you've seen, started these conversations, really trying to figure out what does that platform look like, who are the partners. We see this as a multi-year project that will take about 3 years to complete. But this is one of the projects that we're most excited about. Now, I'll level set a bit here because I know, obviously, you guys are all brilliant. But for the few on the call who are not, I'll share my basic definition that I share with people. I like to tell people that blockchain is simply technology that securely verifies information, facilitates the exchange of value without third parties. And I'll say that again for the newbies. Right? Blockchain is technology that does these three things: securely verifies information, that's the ledger you hear about; facilitates the exchange of value, that's cryptocurrencies; without third parties, that's decentralization. For me, these are the three tenets of this space. And so as you can see, there's multiple access points depending on your interests and depending on how you're interacting with the space. Now, a lot of people struggle with what's the difference between blockchain technology and cryptocurrencies like Bitcoin. I tell them to think of Bitcoin, Ethereum like light, right? Light is beautiful and bright. You can buy a light bulb for 50 cents or $5,000, right? We know that, light bulbs vary, right? So think of Bitcoin like the light. What powers light, though, is electricity. So think of blockchain as the electricity that powers, cryptocurrencies. But that's not the interesting thing, right? The most interesting thing is what a waste it would be if all we did with electricity was light. Think of all of the things we do with electricity that we have no idea about. That is the power of blockchain technology, right? While we're all enamored with cryptocurrencies, that is a speck into the possibilities that exist. And the work that you're doing at Storj, is an example of that, the various use cases and the various access points. And the reason why we know this space is not only disrupting finance, money, commerce, but also supply chain management, identity management, and the like. So when you think of people talking about Web3, what that is, it's exactly what it says: the third iteration of the web, right? How do we leverage machine learning, artificial intelligence, blockchain, when you think of smart contracts, cryptocurrency for microtransactions, to solve some of the problems we have currently in Web2 when it comes to data breaches, identity, stolen identity, and with not just blockchain and cryptocurrency, but machine learning, AI, and others, we can actually have this fusion where we can solve some of these problems, have more authentic engagements, and go deeper as well, which is when people start talking about this thing called a metaverse, which we're far from what we are right now, but we will get there. And then when people talk about DeFi, decentralized finance, it's a bit more complex than people assume. But at the end of the day, it is, imagine being able to do some of the basic things that are the tenets of financial services: borrowing, lending, and trading, right? All of these require an intermediary. To borrow money or to lend money, you need a bank. Oh my God, you need a banker, you need an attorney. And then to trade, you need a broker. What if you didn't need any of the intermediaries for these things? What if you could actually give somebody a loan and it'd be legitimate and authenticated, and terms are set through a smart contract, right? What if you can, without a broker, buy financial instruments? So imagine a savings account that is decentralized. So imagine basic financial services, banking, lending, borrowing, trading, and being able to do that in a decentralized manner. That is the possibilities of DeFi and what is being built. So I'll stop there in terms of the background and go into my, what I'd like to talk about today. So consumer protection, financial inclusion. Most people think they're the same things. They are so misunderstood. So we're going to look at them from a policy perspective, right? So when you look at crypto, right, risk is all you hear when it comes to policy. So consumer protection, it is, Brad Sherman and Liz Warren have made it their mantra, right? Protect, right? And we know that we need consumer protection. The 2008 crisis was an example of that, right? Where, the global collapse required for us to have some guardrails in place. But this is not 2008. But still, just the tenet of we need to protect consumers is accurate. Right? Now, financial inclusion. What exactly is financial inclusion, right? So we know what financial exclusion is. We know that many Americans have not been able to participate in traditional finance, whether it be banking or the financial markets, right? The fintech industry came about because of a recognition that banking had failed so many people, that so many people were already creating alternatives outside of the traditional banking system, outside of brokers and Wall Street, that a whole industry came out in fintechs. So when you think about crypto and the evolution of money, we've been digitizing money for a long time. Like, so financial inclusion for people can mean that a financial system where more people can participate, where everyone can participate, right? But is that all it means, right? So if we're looking at both of these things from a policy perspective, what does financial inclusion, what is the burden on policymakers in Washington? They have clearly defined this for us when it comes to consumer protection. Like, over the last probably 5 years, we've seen the most activity when it comes to legislation coming out of Washington when it comes to crypto. And we've seen financial inclusion be the conversation that is the sticking point, and the response has been consumer protection policies and bills, and that resulted in making it harder for crypto to exist here, for companies to innovate here, making it harder for the industry to operate here. Some would say that consumer protection equates to patriarchy today, right? Some people, we have to protect them from themselves, and because they don't understand the financial markets, because of this, they shouldn't participate. And that's why we have the SEC, accredited investor rule, right? That some people should be able to participate, and they should be the wealthiest and the largest number of assets, and they're the only ones who should be able to invest in new projects like Facebook and other investments that are high net worth, right? And then when you look at financial inclusion, again, from this stance of what is the burden for Washington, for policymakers, they have conflated the two. They've decided, in my opinion, from what I've seen, that consumer protection measures equate to financial inclusion. But these two terms, if you looked at them beyond, consumer protection means to protect something for anything means exclusion. Right? It means you can buy a car, you just cannot drive it. It should not leave your driveway, because that's the only way you can be protected. Financial inclusion means you should be able to participate. You should be empowered with the tools to actually potentially build wealth. So there's a tension between these two. I'm talking about this because right now we've seen so many bills out of Washington for the sake of consumer protection. We've seen zero bill come out to foster financial inclusion. And here's how they've gotten around that. They say that financial inclusion is something the industry has to prove. Show us how this can foster financial inclusion. Where are the use cases? Right? I argue that the fact that Black and Latino communities lead national adoption of cryptocurrency is a reason that financial inclusion is possible here, because you've seen a large group of people gravitate towards an alternative financial instrument because they have been lacked out. So they found an alternative solution. But still, Washington said we're skeptical about this financial inclusion piece. Okay. Yet a whole industry is forming. An industry that as of spring of 2021 was actually spring of 2022 was a $3 trillion market, and now it's probably around a $1 trillion market. Irregardless of what you think about crypto, blockchain, Web3, DeFi, there's a whole industry that has evolved where they're creating jobs, where companies are. Coinbase went public. You have other companies that are looking to go public. When you look at the White House, the infrastructure law, the White House actually paid for the infrastructure law with crypto. Crypto is in the pay for $28 billion. When you look at the budget that the White House just provided, just put forth, the president's budget proposal, it includes measures where the crypto would pay for that, right? The IRS has a question on the tax form asking you about your cryptocurrency, right? So a whole industry has popped up where jobs are being created, where entrepreneurs are thriving. So where is the burden on Washington to make sure that those who are left behind, and when it comes to big tech, are not left behind here? Where's the access to capital policy considerations to ensure that creators and entrepreneurs and small businesses can participate and thrive? Where's the investment for workforce training to make sure that, because crypto and just about every other emerging technology does not require an education, because tech has come so far that a lot of the applications are drag and drop, you don't need a degree to actually take advantage of these jobs. So this would be a great opportunity to close the workforce gap that we have. So if financial inclusion is not something that needs to be proved by the industry or by the people who participate, why has Congress specifically never had a hearing focused on diversity, equity, and inclusion? We've called for it. I am among other people. There's been hearings in Congress with CEOs of crypto companies. There's a stablecoin hearing happening right now as we speak. There's been tons of hearings about crypto. And we know that Washington is well aware that Black and Latino communities lead national adoption of cryptocurrency because they use those stats for their consumer protection policies. So to me, that says Washington is not concerned if communities that have been previously lacked out are left behind and ultimately become consumers and not producers, because that actually ensures consumer protection occurs, right? Because if your anchor is consumer protection, it is making sure that you don't drive that car. It does stay in the driveway, because what if you have an accident? What if you die, right? You're not concerned about me being able to be mobile, participate in the global marketplace. I know I'm taking a very extreme view of this, but as a Black woman who's a Gen Xer who has a master's degree, I am tired of being told that I cannot make decisions for myself about my financial being from the very people that have created a system that protects accredited investors and tells me to sit down and just get a job, do the things that you can do, and that's your best way to build wealth, which we know is actually not true. Wealth creation requires taking risks. You cannot build wealth without taking risks. We cannot build wealth without taking risks. That means we have to take pragmatic risk. That means we have to put in the tools for people to actually get educated, have the resources to be empowered to actually build wealth. Last week, Congresswoman Joyce Beatty and Congresswoman Yoon Kim launched the Congressional Financial Literacy and Wealth Creation Caucus. They wanted a bipartisan approach, but wealth creation, that is for me why this is important, because you can't have wealth creation without taking risks, right? And so therefore, if people are going to take risks, that means they have to drive the car out of the driveway. That means we have to make sure that they get a driver's license, that they have insurance, right? That they know if they get into an accident, there's a penalty for that. We can put in measures that actually helps people to mitigate risk. But right now, Washington is only focused on consumer protection, the easy part that says, keep that car in the driveway. You see, FCS did not affect you because your car is in the driveway, right? You didn't have to lose anything because your car is in the driveway. I'll show a few other examples of where I see this as a huge problem, right? When you look at AML and KYC, anti-money laundering laws make sense. Illicit use of finance, oh my God, when you look at, human trafficking, and the whole terrorism, right? AML makes sense. We need to track where the money goes, right? So anti-money laundering laws were coupled with know your customer, KYC, right? That means banks, we all experience this, right? I used to be able to go to my brother's bank, deposit cash into his account. All of a sudden, a few years ago, oh my God, I had to get a money order. I had to get not a money order, a cashier's check. They had to be track and trace. I was just like, oh, really? Okay. So the issue is not should we have anti-money laundering laws. The issue is KYC keeps the very most vulnerable people out. KYC now says, if you don't have a driver's license, if you don't have a credit card, if you don't have a utility bill, you can't participate. Hell, you didn't have those to begin with. You couldn't participate to begin with, but at least before you had some workarounds, right? You could get a money order. I could deposit money into your account, but I could do these things. The most vulnerable are the only people, are the main people who have suffered under KYC and AML. When you look at states like California that, prides themselves on pensions, right? California is a state where, oh my God, just about anybody can get a pension. There's a study that said that they actually, there's a program to actually get more people in California in pensions, especially, people who worked at, working class people, right? McDonald's, Walmart, right? Those people who didn't know they qualified, but they do qualify and they can apply. So there's a program that says all you have to do is come, bring us your driver's license, bring us your credit card, bring us your utility bill, automatic, right? What if you don't have those things? Well, before KYC, you probably could have worked with them on a workaround, right? Well, maybe this, right? Maybe that, but not anymore. So therefore, you are holding people back who need basic services that they didn't even know they had access to. Now, because you want to stop the illicit use of, finance, that it has to be on the backs of the most vulnerable. I have to say, there has to be a better way. We have to stop building policies on the backs of the most vulnerable. That is a clear example where we can tackle illicit use of finance and money laundering and also make sure the most vulnerable who never had barely a driver's license, some don't even have a birth certificate, can participate. And finally, another example, which is actually, I shared that this is the Foundation's first paper on financial literacy education in K-12 schools. Our next paper is going to be on the need to modernize credit unions, minority banks, CDFIs, and neobanks. Like, especially now in the context of the second and third largest banking crises, right? We know that the most wealthy are taking risks with our money. Congressman Cleaver used to, well, he still does, tell a story. Congressman Cleaver is a member of the CBC. He tells a story about his grandmother and how his grandmother, this was a while ago, and his grandmother, when banks first came about, they told his grandmother she should create a bank account. And his grandmother said, wait, you're telling me I'm going to give them my money and trust that when I want it back, they're going to give it back to me? Well, Silicon Valley Bank was a great example that his grandmother was right. And the people who were hiding their money underneath their mattress, they actually were onto something. I'm making light of this, but when you look at this whole thing of banking, you give your money, they're supposed to give it back to you. So the current banking crisis has prompted a lot of conversations. It also prompted conversations about various financial institutions, right? Especially credit unions, right? Or community banks, right? You know, these smaller institutions, right, do have an opportunity to actually help people. So let's take this to crypto. When you look at the adoption of crypto, the nerve center of adoption is among working class people, communities of color, young people. These are the people who are likely to go to a credit union, to go to a minority bank, to go to a community bank, to even pursue a neobank, right? These are not the people who are likely to go to JP Morgan, right? Or to go to Wells Fargo. When, great for the Federal Reserve to give BNY Mellon, approval to offer custody. But what about the credit unions? They're the ones who actually are getting requests for these financial instruments. But these institutions are still operating in the 19th century, barely in the 20th century when it comes to infrastructure. They don't have the regulatory compliance to actually offer, digital assets, or even some of the more innovative fintech financial instruments. So when you look at these institutions that are on the front lines of adoption of digital assets, they are the institutions that are most likely to offer digital assets and risk mitigation help, right? They're the ones who, if a crisis happens, they're more likely to know who their patrons are, who own the cryptocurrency, who are interested in cryptocurrency. They'll probably have courses. They'll bring people in and share. And these are the patrons that will come to them and say, I lost my this. And they have to realize, oh, we need to do more courses on, self-custody. We need to, discuss what wallets are. We need to figure out what are the safest wallets for people, right? So for me, and for each of you who are part of this DEI council, as you're thinking about, diversity, equity, and inclusion, we have to be more thoughtful. We can't take things for granted. We have to say consumer protection, okay, we need consumer protection, but how do we ensure we move forward and we do not continue to leave people behind or hold them behind? Financial inclusion. We all want to foster financial inclusion, but how can we do that in a meaningful way that the people who have been excluded, rural communities, communities of color, can participate in the solutions? And how can we be honest and recognize when these policies are hurting the most vulnerable? On that note, I'll stop there. I know there was some stuff coming through the chat. Unfortunately, I wasn't able to pay attention, but I'm open for questions and look forward to your thoughts as well.
Anna, did you want to share any comments or questions you've gotten?
Kevin stated, or I don't know, Kevin, if you're on the call, if you want to
I
speak
am.
to the comment.
Oh yeah, one thing. I think this is a really great presentation, Cleve, and I really like the way that you outlined kind of the difference between consumer protection and inclusive access to financial services. And I think that is like kind of the key question, right? Is how can we protect people from, obvious risk, but not limit them from partaking in, really riskless investments in the economy like T-bills and things like that. So how can we like give this interest that's created to everyone? And I think the reserve ratio being 0 as of 2020, right? Historically, it's always been at the lowest 20%. That means banks can lend out all of the money that you put into a bank and take risk on it. And if they are successful, they get to keep the money. If they're not successful, they fail. But if they fail, they likely will get bailed out by the taxpayer. So it's win-win for bank, lose-lose for consumers. And I think crypto and DeFi really offer a means to fix what's called the moral hazard in that system. So I think you did a great job explaining that.
Yeah. And thank you for articulating and putting that in context, because it is for people who cannot participate, the only alternative is alternatives, right? And as you've noted, our regulatory framework allows the wealthiest entities to take the most risks, right? And so we have to be honest that the issue is not risk. Our issue is just who should be allowed to take the risk, right? And then this tension with, and it is tough, how do you protect people and also allow them to participate? Maybe part of the problem is the fact that we have financial policies that are based on 1930s laws and rules, that we have a government that refuses to do the hard work of governing, of actually rulemaking. I would argue that today we don't need, a regulatory framework for blockchain and cryptocurrency. We need a new framework for financial services and for financial markets.
Agree.
Any other thoughts?
I have a question on that, just to follow up. I thank you so much for all the work that you're doing and just bringing voice to all of this. So I appreciate it very much. I'm curious what work is being done in that area that you just mentioned from, really a brass tacks perspective. What would it look like, to have that approach?
Yeah, so I am by no means brilliant, but I know this conversation about the tension between consumer protection and financial inclusion is not a conversation that's being had. I'll share an example. The Aspen Institute has a financial security program that they've launched, and I've been participating in that since last year. And they, Aspen is really looking at how do you build an inclusive financial system. As many of you may know, last year, Senator Chris Coons and Raphael Warnock proposed the creation of a presidential commission on financial inclusion. And so this presidential commission would actually have the mandate to actually do a deeper dive in financial inclusion. And so, which sounds great, because that would come with funding and a mandate for a lot of the agencies that take for granted that consumer protection is the same as financial inclusion. But even within those conversations, I struggle with making people, because the group includes folks from government, from industry, and also nonprofit and advocacy groups. I struggle with people who struggle with the differences, right? Who are comfortable admitting that they are different, that there is a tension, and because that would require, how do we address it? So, it is one of the issues that I've really been trying to promote. I definitely know the organizations that have been focused on economic empowerment and financial protections over the years are doing great work. right? And for them, the consumer protection policies, these guardrails have been the thing that they could point to as to, protect people. Like, so that is part of their toolbox. One thing we know from psychology, you can't take somebody's toolbox away and not replace it, right? They're gonna fight like hell for it. So I do think that, there are a few other people who, we've been talking about this. How do we make this part of the narrative a bit more by just acknowledging the tension between these policies, and that we can figure out how to mitigate that when a lot of people don't want to recognize that. Even with some staffers I've spoken to are just like, well, look at the state of, FTX, and I'm like, well, look at the state of, Silicon Valley Bank and, Signature Bank. That was all y'all. Where was the top cap? Right? So going back to your question, this is a tough sell for people. And this is it may be logical, but for people who, are saying, without that, this guardrail of consumer protection, which today includes ban it, stop people from doing it, it's hard. But I think this is where, those of you on this call who care about diversity, equity, inclusion, who probably work with groups that are focused on this, like they need more empowerment to have these conversations. I'll tell you, even the minority banks and the community banks and the credit unions that have been talking about their need to provide more digital asset services based on the demand they're getting. Oh, trust me, the OCC, SEC goes after them as well. It's less like, whoa, right? And so if Congress is not talking about financial inclusion at all, like how can we actually, find this bridge? So answer, not many people are talking about it, but hopefully the more I talk about it and others talk about it, we'll find that middle ground.
Do you find, can you name any champions in DC that you feel are really helping this effort?
Well, yeah. So at the Consumer Reports, there's a young woman, Delicia Reynolds Hand. She for Consumer Reports, she's leading a new project for Consumer Reports. As you know, Consumer Reports tells you, which, iron or which vacuum is safest. So they've launched it for fintech and crypto, right? So, and Delicia used to actually work for the CFPB. And so for her, it was that the CFPB had a role of protection, but where's that, next piece, right? Because people are using these financial instruments. You see? Yes.
Right.
So, sorry,
No.
So Delicia at Consumer Reports is creating a framework for assessing risk in products. So where it's not a question of no, people shouldn't use them, it's a question of we can do that assessment. And at the Aspen Institute, their financial security program, they are very open to having this conversation. And there's an organization called AIR by Joanne Barefoot. What does AIR stands for? The Association of Regulatory, the Association of Regulatory something. I'll have the name, but they're looking at it as well. Sorry, I know you were trying to get in there.
No. It did make me think of, I don't know if I would call this an opposite position, but the fact of all of the fraud that was involved with the FTX scandal, as well as others, that it actually took advantage of people that were looking to get into these digital assets as a means to create wealth. And I'm not saying that I agree with that position, but it is a position, and I'm wondering what your thoughts are on that.
Yeah, so just as to to build wealth, you have to take risks. That any investment, right? Bad actors are all over, right? So when we look at FTX, what FTX, you could look at FTX as today's Enron, right? You could look at SBF, the CEO, as today's Bernie Madoff, right? What FTX's collapse wasn't a crypto collapse; it was a financial services collapse. Where was Gensler and the top cop? Where were all of these regulatory agencies? Why did they give this company a pass? Because now when you peel back the onion, a lot of these issues were pretty glaring if the regulatory bodies were actually paying attention. And when you look at the playbook for Bernie Madoff, right, the Enron playbook, why haven't there been regulatory policies that would make it hard for actors to take advantage of the financial services space? And so it's always like, even with Silicon Valley Bank, people all want to say that was because of crypto. No, we have how many regulatory bodies? Oh my God, CFPB, OCC, CFTC, SEC. Oh my God, the limitless that are supposed to watch traditional financial markets, and they don't. But what they do feel comfortable is watching what poor people and marginalized people are doing and keeping them out of the market, while not stopping any of this from happening, right? So the issue is not that, people, if you drive the car, somebody might,
Right,
hit you. But the reason they hit you was because the government said it's okay. They can actually hit people as long as there's a limit of how many or how.
yeah, no, that's a great way to look at it. I like that take a lot. Thanks.
Are there other questions or comments?
Well, I would say that, and even when you look at, again, the need to really look at these two policy areas separately, I also think it's important for people to also look at financial inclusion as not just a Black and brown issue, right? So when you look at, financial inclusion, people always think of the Black community or Latino community or the like, right? We forget that rural communities, which are the most, there are more Black people in rural America than in urban America. Yeah, but when you look at rural communities and how they've been locked out of traditional financial markets, like, it's a disservice to not, not have a wider prism of financial inclusion when it comes to who has been locked out, who's been marginalized. Like, when you look at rural America, the lack of access to healthcare or financial services, these are people who, please, let alone, the local bank, versus, we struggle with which bank should I go to? Which one can I walk to? Why isn't this bank in my neighborhood? Right. So I would say it's important to, and even beyond, rural communities, when you look at, communities that are differently abled, called the disabled communities. Like, we have a long way to go when it comes to doing what we're all on this call trying to do, is build an inclusive financial system where everybody can participate in.
Yeah.
I have so many questions, but I'm going to try and limit myself to one. I'm curious, from your standpoint, which direction you think we're heading. Are things getting better or worse, at least in the US, when it comes to financial inclusion? And we, as you know, are a global company, so I'd be curious too if your answer to that would be different globally.
Yes, right. So I actually am optimistic globally, where when you look at adoption of crypto and blockchain, the West, oh my God, so much conflict and, division, and adoption on the continent of Africa, huge, booming, right? Adoption in Latin America, oh my God, exploding. Adoption in Asia, if you take China out of it and put India in it, so globally, adoption of emerging technologies in countries where there's high inflation, the central bank is weak, the local fiat is not strong, where there's not a grid that you have to, disconnect with. In countries where we've actually, the last decade, gotten the mobile phones in the hands of people, right? And we know that is that entry point for crypto, right? That mobile phone. Well, we've actually, even in the most rural community, my family's Haitian American. I remember 2 years ago going to a mountainous community in Lazille, where my family's from, and there's a man on a donkey on a cell phone. There's no, the donkey is his mode of transportation. So I was perplexed. I said to him, "Who are you on the phone with?" Oh, his cousin in Germany, right? So, but still, we still limit them to Western Union that takes 40% of the money when his cousin in Germany sends him money. What if his cousin in Germany could use that phone to send him that $100 and, sorry, Western Union, get your cut elsewhere? Like, so when you look at the mobile phone and the most, emerging worlds that we previously called third worlds, that's where you see the most opportunity. Again, high inflation, central bank is not strong, local fiat is weak. And then when you look at these countries as well, the other game changer is young populations. The average age across the continent of Africa is 21. Right? Most of these countries, the average age is lower than 25. And that's the same for Latin America. The average age in Latin America is probably a little older, still under 30, probably about 28. So you have these nations where the largest population, they're digitally native, and they're citizens of the world, and they have large populations to adapt. So I'm sure many of you know about M-Pesa in Kenya 15 years ago. That was the response to the inflation area. The central bank worked with the private industry to actually create M-Pesa, which is not a cryptocurrency, it's a digital currency through a mobile phone. And 15 years later, M-Pesa, I believe it has about over 85% participation. M-Pesa was such a success that Brazil copied M-Pesa, and they have Pix, and it's even more successful. So when you look at the success of other nations that are now, their citizens are stepping up to participate, because when you have not been able to participate, the only alternatives out there are alternatives. So globally, I think the prospects are tremendous, right? And one of the depressing things for crypto, when I first got into crypto, everybody loved decentralization. We were all there to diminish the barriers of entry. And as the price of Bitcoin, grew, there was a fork, to use the term, right? There was those of us who are still in it for decentralization, empowerment, and those of us who are really focused on store value. How do we, build adoption, make more money, right? So globally, you can actually meet both needs, right? Because in Brazil, you don't need a high price point, right? Adoption is so high. And also because these young populations, they're digitally native, so they have innovators. Where I'm most concerned is the West. And actually I will say that this keeps me up at night. And I'll be honest with you all, sometimes being in crypto for over 6 years, sometimes I do fear that a decade from now, I will wake up and I would have helped to create another industry that is not inclusive, right? So when you look at the fork I mentioned in the industry, that some people have abandoned decentralization for store value, when I think both of them can coexist. When the fact that Congress is not looking at financial inclusion from this lens, hold the industry accountable for the use cases, but still, these jobs are still happening, right? We still have to make sure people are being trained to take on these jobs, right? That these companies, right, that they're fueling creator communities. How can we make sure there's more access to capital for entrepreneurs, right? So if we don't have Washington saying we need to make sure that the marketplace is inclusive, right, and is also making investments to do that, right? Everyone's focused on consumer protection. Yeah, we will succeed by pushing Black and Latino communities out of crypto, making it harder for them to participate, making it easier for just the wealthy who have lawyers and accountants to actually withstand, Gensler's regulation by enforcement approach. And the result will be a new industry that is not inclusive. And yeah, it will hurt my heart to have helped to create such a thing, but I'll be so angry at Washington because I feel like that's what they're doing. Their policy approach is putting us on that trajectory. So in the Western world, the future of crypto for me is grim, but globally, it's amazing.
That's a powerful note to end on. I recognize we've gone over, and I know some people are leaving for other meetings. Thanks for sticking around, though. Cleve, it's been wonderful to have you here today. We're so glad that you joined us. Thank you so much. Thanks for being a friend of Storj, of Storj Institute. And you're welcome. You're welcome back anytime.
Thank you for having me, everyone, and continue the great work you're leading.
Thank you.
Thank you so much, Cleve.
Thank you.